Welcome to Bears in Exile. Today is Friday, uh, February 10th, and this is the weekend market overview. Trying to get a head start on everything so we can put out some extras this weekend since we're back back in the saddle. Anyways, looking at everything that we typically look at, and maybe a few extras for good measure. Starting off with the Dow. Well, very a fun day. Finally a fun day, but not a perfect day. While there are some encouraging signs, by no means does it mean that the bears are out of the woods, or for that matter, that the uptrend has even ended, or stopped, or paused, or anything else. Here we are with the Dow. Nice red. Look at that tail at the bottom, though. We had a downtick today, and it was resolved intraday, meaning that this bubble is fixed. So the question becomes, what is the next step? That's what determines the direction here. Are we going to go down for a test of the bar? Are we going to continue on the way up, which has been, the case all these other times? Well, we have the 14-day RSI moving average ticking down, finally. I mean, clearly. We have the stochastics pointing down. We have the CCI pointing down, the RSI pointing down, the histogram ticking down, the MACD getting the bearish cross. Yeah, this looks very encouraging. Today was the realization that perhaps there's a Greek problem. And immediately after the close, they came out and said, oh, the Greek problem is solved, which means it's sort of solved, and maybe next week it is solved, which is the same old story. Now, is that enough to reverse all of this? Well, if history is any indication, yes, the possibility exists. So we cannot discount that this was a bubble corrective move, and it has resolved. That is absolutely possible. SPX. Almost the same thing. We had a downtick today. It was not quite resolved intraday. It gives us a target right about, I want to get it exact, right about 1333. And it's actually just a hair above 1333. But regardless, it did a pretty good job today going down, but we have a huge tail. The dip buyers are still around, and they're probably not going anywhere until we break the just shy of the 1330 area, which is the upper price consensus level, which would reopen this range between the lower price consensus level and the major price consensus level, which is right about just shy of 1314. I'm just going to call it 1313. So that is where it should gravitate to, which would be fine. We do have a downtick on the 14-day RSI moving average. We have downticks on the stochastics, but there's still an overbought. They could reverse here. Down on the CCI RSI, no bearish cross on the MACD yet, and MACD histogram ticking down, but not at zero yet. So, yes, it's an encouraging day. But does it mean anything yet? No, it does not. So we need more, and hopefully Monday will bring more. CompQ, the NASDAQ. We've been saying this has been holding up the market this whole time, driving it. And what do we have? We ended with a small body spinning top that's green, and we now have 7 green days in a row. Yes, we have a downtick. It gives us a target of just above 2860. I'll call it to 2864. So it would be a nice move down to have a complete bubble corrective move. We are far away from that, so but we do have 4 days for that to complete itself. Be greater or better, greater, if we go down for a a retest of the bar and meet up with the major price consensus level, but we do not have an indication that that's going to happen yet at this time. And 14-day RSI moving average, yes, we have a very slight tick down, but we need to see the angle improve towards the downside to give us a better indication that it's actually time for that. And just like the Dow, just like the SPX, actually much more like the SPX than the Dow, everything trying to turn down, but everything very high. If we could, it could decide to try to bump again and reverse course and stay locked in the upright position, but we just do not have enough information at this time. We did not get the clear signal, a big red or a shooting star looking candle or anything like that, saying that the sucker's over. Definitely this candle should give bulls hope and bears pause. The VIX. This one did a pretty good job at its height today. A lot of people were talking about VXX, the TVIX, which just were out of control up today, which is actually kind of a bad sign. And the VIX did very well also, 11.5% to the upside, giving us this huge spinning top and getting outside the upper Bollinger Band. Uh-oh, that's a warning sign. Stochastics already in overbought. CCI already way overbought. RSI getting close but not quite. Up on the histogram, up on the MACD, and up on the 14-day RSI moving average, which has plenty of room to move still. Now breaking out of a bubble corrective move, resolving its uptick, and then going beyond it is a good sign, and does say that it wants to take the fight to the bar, which is very strong in a bearish way. So that should not be discounted. And as it is now getting up in here, once the short-term moving averages actually catch up to the candle, it should find resistance here. At the very least, it should be slowed down. So encouraging, but very, very fast, which normally is not the best of signs. XOI oil. Yep, we have a downtick today, ending with a hanging man. It almost got to a bubble corrective move. It's just a hair short, and not the greatest signs either. The 14-day RSI moving average is still flatlined. The stochastics are trying to hook over, but we do need to see the 14-day RSI turn down. Down on the CCI, down on the RSI, down on the histogram, slightly down on the MACD. We do not have a bearish cross yet. I would think that this is a bit of a warning sign with the candle that it put in today, with the hanging man or hammer, whichever you want to call it. If this had been just a solid big red candle, that would have been great. That would have been a sign that we are going down for a retest of the bar, but instead we had dip buyers come in and buy up the lows. So there is interest, and a lot of people are believing that this is just another buy the dip opportunity. Certainly it can be spun that way over the weekend with the news, so can be dangerous. TNA. We had the downtick yesterday. It was resolved today. The bubble corrective move is finished. So now we have to see with this little spinning top that we have if we're going in for a retest of the 200-day moving average or the long-term bullish bar. And looking at the 14-day RSI moving average, yeah, we have a slight downtick. Nothing major yet. We have to have the angle of descent improve to really give us confidence that it is going to be going down now. Stochastics are on the way down. CCI is on the way down. RSI is on the way down. Histogram's on the way down. MACD is on the way down, but we don't have a bearish cross yet. And we have an indecision candle today at the conclusion of a bubble corrective move. Not exactly the greatest positioning at the moment for continuing down. because while we would love to have a just a little waterfall here, have it to switch over and go into cascade against the long-term moving averages, we do not have enough information to confirm that that is likely at this point. That is what it is. XLF financials. We had a downtick today. It was not quite resolved intraday, ending with a green small spinning top. 14-day RSI moving average hooking on over with the stochastics, CCI, RSI, histogram, and MACD all heading down. We do not have a bearish cross yet on the MACD. It would be nice to see this complete a bubble corrective move, maybe even go in for a hit of the upper price consensus level at 14.2. But we simply just do not have enough information until Monday, and wish there was more to go off of here. Certainly we have encouraging signs, but by the same token, we cannot just say that, hey, this is it. UUP, now for the interesting stuff. Okay, this has been the driver of the market. Huge gap up today, getting an uptick, and resolving the price target intraday, ending with a small spinning top. And this is one of the reasons why I have a little bit of a pause about the odds at the moment. Small spinning top, indecision candle, bubble corrective move is complete. 14-day RSI moving average is still pointing down. Yes, everything else is trying to turn up. CCI, stochastics, histogram, MACD, RSI. Don't have a bullish cross yet on the MACD, but could this just turn around and go back down? 14-day RSI moving average says yes, it could. So got to take this spinning top seriously at this moment. The long-term moving averages are gone. They're starting to cross over. Essentially, they're in a flat line at the moment. They should not provide too much suction to bring the price back into itself at this moment. Actually, it shouldn't provide any. So, not exactly what we would like to see. We do have the middle Bollinger Band getting below the candle and trying to get below the short-term moving averages, but that move is still right smack in the middle of its cross, so it is vulnerable to going back down. Looking at FXE, the euro, we ended with a little doji star, no real body. I mean, it's really small. You have to really blow it up to see it. It had a downtick today. That downtick was almost resolved intraday. Not quite, but very, very close. And we were talking last night about the potential for this going back down and then collapsing into a double flat line over the course of a week. Today agrees with that, but of course we don't have enough information. 14-day RSI moving average still pointing up, and just like UUP, everything else trying to reverse, having a little more room than UUP, but still 14 days pointing up. So normally when you have it pointing in one direction and everything else pointing in the other direction, its move is subdued. So having it hang out here in this range of the long-term moving averages would be normal and would lead to a double flat line, which would not be good. You'll notice also that it is now underneath the upper price consensus level, and or below the upper price consensus level and above the major price consensus level. Normally when you do that, there is a area of congestion, and so certainly very likely that it's going to bebop around right here. It'd be better if it ended up at the major price consensus level and stop, but instead of just hitting the top again and back and up and down and all that jazz. But nonetheless, that is what it is. Hopefully we can have a decent move on Monday, Tuesday, and be able to figure out that it is going to go down or up and not collapse into a double flat line. GLD, the second VIX, had that bearish engulfing yesterday that we pointed out. It did go down, but it was green. With fear increasing, it should go up. I think in the push-pull between the dollar and fear should win, and at least today it seemed like it did. Beyond that, the downtick that we had from 2 days ago has been resolved completely, conclusively. It did end up above the upper price consensus level for this month. We have the 14-day RSI moving average going sideways, which is a good thing. Stochastics heading down, CCI heading down, RSI heading down, histogram heading down, MACD getting the bearish cross and pointing down. And I do think that a test of the long-term moving averages and a bounce off would be very, very healthy at this moment, but we're going to see. And SLV, very similar, except that it closed below the upper price consensus level today just by a hair. We have resolved the downtick that we had from yesterday, and 14-day RSI moving average still ticking up, and then just like gold, everything else ticking down. This one has more to move to the downside if it's going to hit the long-term moving averages and then do its bounce. And just for good measure, GE. Said yesterday that this bearish engulfing was not a good sign for the Dow, and in fact the Dow today had a bad day. We had that downtick yesterday. It was resolved completely today. The bubble corrective move is finished, and it came down, actually got below the major price consensus level and was bought back up. 14 days still ticking down. Stochastics clearly on the way down. Should have some acceleration as it crosses the 14-day RSI moving average to the downside. CCI ticking down, RSI ticking down, histogram ticking down, and MACD ticking down. So this is not a good sign for the Dow. And last but not least, since we're watching the NASDAQ, take a look at Apple. We noted yesterday that it was outside the upper Bollinger Band and needed to go sideways or down to get back inside of it. It did go sideways. It did get back inside of it. We clearly have excessive separation in the short-term moving averages. We have some wobble. And all of the secondaries, along with the 14-day RSI moving average, which ticked up, are locked in the upright position. We do not have a clear sign of a down move or a bubble corrective move or a bar retest move or any move down of any kind. We do have a spinning top today, but Apple's just massively strong. If this one would do something to the downside, it would probably take the NASDAQ with it. So we have GE saying the Dow should be not too strong. We have Apple saying that the NASDAQ should be strong, and everything has been following the NASDAQ. So I don't know what to tell you. And that's going to be it. A little bit longer video than normal, and we should be having some more videos pop up this weekend. Hopefully Vegas Baby will make its return, and as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only.